Eventually, the trade turmoil should abate. U.S. Secretary of State Marco Rubio says what follows will be new trade deals. It looks like too much, too quickly, leaving a trail of chaos. Consequences will linger, and businesses, institutions, regulators, and even countries are fashioning and fine-tuning proactive responses. Meanwhile, Yemen's Houthi movement said on Sunday they were prepared to meet escalation with escalation after U.S. strikes targeted the Iran-aligned group over threats to resume Red Sea shipping attacks. Oil markets were up in early morning trade over 1% towards $72 a barrel as we see risk premium inching up. Hello, welcome to Global Business Insights, where we analyze the main business stories. But first, some headlines. Stocks rallied on Friday, recovering steep losses seen over the week on Wall Street as tariff-related headlines somewhat cooled off. The Dow Jones Industrial Average up 1.65%, the S&P 500 climbed 2.13%, and the Nasdaq advanced 2.61%. Also, the best day in 2025 for both the S&P 500 and the Nasdaq. Also on Friday, we saw University of Michigan consumer sentiment in March in the US down from 64.7 to 57.9 and below forecast of 63.1. Inflation expectations jumped, with Americans saying 12-month inflation up from 4.3% to 4.9%. The US FOMC, that's the Fed Open Market Committee, is expected to hold rates steady. That's on Wednesday. Markets are pricing in also a hawkish slant. We will hear Fed Chair Jerome Powell's views and if he comments on the tariff-driven uncertainty. In Europe, European Central Bank Vice President Louis de Guindos on Sunday said US trade policies are causing more uncertainty than there was during COVID. We see more central banks forced to come to terms with how to respond to the trade turmoil as many policy meetings hold this week. US Federal Reserve and the Bank of Japan will meet today and tomorrow with decisions on Wednesday, while on Thursday it will be the turn of the Bank of England. The latest polls show Americans, though still upbeat, are increasingly concerned about the economy and will be scrutinizing February retail sales data, which comes out later today. Baidu has emerged as the latest Chinese tech giant to unveil a new reasoning artificial intelligence model which can compete with DeepSeek's AI solution. The sudden rise of China's artificial intelligence industry has been increasingly unsettling investors in American competitors. In China, steps are being taken to revive consumption by boosting people's incomes, according to news reports. Other measures include stabilizing the stock and real estate markets and offering incentives to raise the country's birth rate as Beijing tries to ease the deflationary pressures afflicting the economy. As Musk faces continued brand backlash from his involvement in DOGE, that's Department of Government Efficiency, his Spacex capsule docked at the International Space Station, delivering a new crew and rescuing stranded U.S. astronauts Suni Williams and Butch Wilmore after being stuck for 9 months in space. UK Prime Minister is struggling to balance the books ahead of the Chancellor's spring statement later this month. Sir Keir Starmer and his government may be forced to back down on some of their goals to execute a £5 billion cost-cutting reform on sickness benefits. And in Europe, Porsche SE, Volkswagen's biggest shareholder, confirmed that it is not considering selling voting shares in Europe's largest car maker as had been reported. Porsche owns 31.9% of Volkswagen's equity and 53.3% of its voting rights, and also holds a blocking minority in the untraded voting shares in Porsche AG, the luxury sports car maker that was listed in 2022. And in Nigeria, the Central Bank of Nigeria, CBN, says foreign debt service gulped about $5.47 billion between January 2024 and February 2025, further indicating the increasing burden on the nation's revenues, as well as pressures on external reserves and fiscal stability. This was as the total foreign exchange direct remittances increased by 1.3% year on year to $180.03 million in the first 2 months of 2025. It has indeed been a lot of noise in the first quarter of the year, but the new US administration has also sent out some signals that are getting clearer by the day. We look at how the rest of the world may be responding to the world's largest economy, saying they are going through a transition to a more private sector-led economy, which has still foggy implications. But like for every external development, you do get threats and opportunities. European companies are more likely to be the most impacted, perhaps because of the strong alliance Europe had with Biden and the perceived liberal affinity or support for Democrats. This administration is viewing Europe with intense suspicion. My sense is that rather than respond with tit-for-tat brinksmanship or dwell on the obvious ideological gap, this can be an opportunity for Europe to transform its competitiveness and to reconfigure its structures to be more attractive, far more attractive for business. I may agree with French Prime Minister François Bayrou, who said on Sunday that the European Union was probably mistaken in targeting American whiskey in retaliation on this tariff tit for tat. Instead, he's calling for talks to avoid more damaging duties on France's cognac industry. Mario Draghi, the former Italian Prime Minister and ex-president of the European Central Bank, could not have put it more bluntly when he warned last year that Europe faced an existential challenge unless it could take advantage of the latest technologies to raise its productivity. In his landmark competitiveness report, he said Europe had largely missed out on the previous internet revolution, pointing out that the EU accounted for only 4 of the 50 top tech companies in the world. The UK have been more nuanced in their response to steel and aluminium tariffs, and they are strategizing on next steps, which will include schmoozing Trump at a Buckingham Palace State dinner to get a UK-US deal announcement. For emerging economies, there are threats and opportunities. India and New Zealand on Sunday announced the relaunch of free trade agreement talks after a 10-year break, following a meeting between New Zealand's Trade Minister Todd Mackley and India's Commerce Minister Piyush Goyal. The talks come as India aims to conclude trade negotiations with the US and the European Union also this year. Trade talks with Australia for a comprehensive deal are also in progress, along with renegotiation of the Association of Southeast Asian Nations trade deal. Other emerging economies should step up trade diplomacy, as India is doing. Africa is not in the crosshairs of Trump, except maybe South Africa, and the potential of an integrated Africa trading and doing business with itself is still vastly underexploited and has always been a low-hanging fruit. The Africa Free Trade Pact should be stepped up. It needs more speed, ambition, and intensity. And I do not see much future for the US-Africa trade legislation. That's Africa Growth and Opportunity Act, AGOA. But instead, the US will be more open to bilateral deals with main regional hubs like Nigeria, Egypt, or Kenya, especially in regions where it can counter China's rising influence. Nigeria has an opportunity given the huge win-win potential. South Africa will more likely expand its cooperation with a faster rising China within the BRICS alliance. Emerging markets debt of late has begun to struggle. The market turmoil has broken years of junk debt EM outperformance as we see more risk aversion and forecast of higher rates for longer in the US. making EM junk debt less attractive. The higher for longer cost of borrowing should be a concern, and many African countries need to be restructuring their finances to bring down their debt exposure. China and Russia are also likely to solidify their alliance with strong pushback at any chance of the US trying to align with Russia. It will be interesting to watch the conditions that are eventually agreed for a ceasefire in the Ukraine situation. Donald Trump and Vladimir Putin are set to hold a call about the Russia-Ukraine war in the coming week. My view is that China is not likely to be as affected by US tariffs as it could if more non-tariff barriers are erected by the US. But we have to watch as more anti-China actions rev up. For more insights on where things stand, the comments by the central bankers this week would be very useful. I would wait for the second quarter to get clarity on the impact of tariffs on inflation and on economic growth. The US administration is also racing to get out its tax cut legislation out before summer, hopefully to override the current negative mood and lift sentiment. China's retail sales was up by 4% in the January to February period from a year ago, compared with the 3.7% year-on-year growth in December, also in line with estimates. Also, Chinese industrial production just out today rose 5.9% year-on-year in the same period, slowing from the 6.2%, but better than the 5.3% forecasted. Meanwhile, fixed asset investment grew by 4.1% year to date, that's year on year, in January to February, beating the expected 3.6% figure and higher than the 3.2% last month. According to the release, the national economy was off to a steady start with new positive momentum. Still in China, global CEOs including Qualcomm Cristiano Amon and Saudi Aramco's Amin Nasser will travel to Beijing for an annual gathering of top executives, the China Development Forum, which could include private meetings with top leaders like President Xi Jinping. The event runs from March 23rd to 24th. The Treasury Secretary, Scott Bessent, said yesterday that he is focused on preventing a financial crisis in the US due to massive government spending over the past few years. He added that he is guaranteeing that a financial crisis would have resulted if the new administration had not done a reset and put things on a sustainable fiscal path. And in Europe, UBS chief executive Sergio Ermotti retained his status as Europe's best paid bank boss. Last year, he was paid a higher sum than the previous year of $16.8 million. This is as the remuneration in the financial services sector faces growing scrutiny in Switzerland. Drug maker AstraZeneca said today it will buy biotechnology firm EsoBiotech for up to $1 billion. EsoBiotech's engineered nanobody lentiviral platform can genetically modify immune cells directly inside the body, allowing transformative cell therapy treatments in a much shorter period. Asia-Pacific markets mostly higher today, with investors watching Chinese equities after the government yesterday announced that it was taking steps to revive consumption and that more details would follow. Well, that's all we can take on this episode of Global Business Insights. We're on Business Day TV, Monday to Friday, 11 a.m. West Africa time. Thanks for watching. This is Bode Oshusami. Bye-bye.